This discussion is going to be on a quite unique question which is bothering a lot of students when they took up their mock examination conducted by ICAI for January 2026 examination. This mock paper was issued by ICAI in November 2025. It's one of the least tested topics, one of the most ignored topics, one of the topics what all of us usually do theoretically. This is minority interest going negative. And lot of you, if you would have seen the question and checked the answer and try to match the question with the answer, you would go wrong. So what you should do is, should not see the question, try to match with the answer. In the way in which we have learned how to solve, you should have seen the question and try to write the answer on your own and then check the answer that you have with the answer that's given by the institute. A 14 marker question. This is question number 3 on consolidation. I'll anyway share the PDF of this mock paper, which is actually downloadable on your SSP portal, and the solution that I am going to solve now in the class in the PDF. You can check it out. It will be there in the Telegram channel as well as in the by way of a PDF in the PDF link in the description to this video. Can we watch this? Can we solve this? Read the question. GB Limited acquired 80% of the equity shares of TB Limited. So can I say GB is the holding company?
Yes, sir.
And TB is the subsidiary company. The holding company has how much percentage stake in the subsidiary company? 80%. On 1st April 2018, and the cost of investment is 58 lakh. 58 lakh is the book value of investment. Nominal value, they have not given information right now, but in the very next line it's given. Equity share capital of the company is 50 lakh. Simple, no? 50 lakh is the share capital of subsidiary to be split between holding and minority. Holding share, they've not told number of shares, but they've told 80%. 80% of 50 lakh comes to be 40 lakh. 40 lakh is nominal value investment. 58 lakh is book value of investment. Don't tell 18 lakh is the difference. We'd have to identify the reserves of the subsidiary, which is 4,64,000. This also should be split into pre-post. Then pre-acquisition reserves to the extent belongs to holding company should be adjusted from the book value of investment, then compared with nominal value to find goodwill or capital reserve. I hope all of you understood.
Yes,
Very good. Till now the question looks quite familiar. I'll tell you where it will become uncomfortable. If you just glance through the next paragraph, oh my God, what the hell is this? They've given 18, 19, 19, 20 IPL season tara. 18, 19, 19, 20, 20, 21, 21, 22, 22, 23, 23, 24, 24, 25. How many years have they given? 1, 2, 3, 4, 7. Tala for a reason. You are required to calculate minority interest and cost of control. Ashte. There is no need of doing balance sheet. Share capital you split into 2. Reserve you split into 2. Share capital holdings portion book value compare with pre-acquisition reserves identify cost of control. Share capital to the extent it belongs to minority. Reserves to the extent belongs to minority. Add it and find minority interest. For which year? 7 years. You do it 7 times. Count it like 2 marks for each year. 1 mark for cost of control, 1 mark for minority interest. It will be 14 marks. But shall I tell you something? Cost of control doesn't change. Cost of control doesn't change. It will stay the same. Why? What and all is there in cost of control? Nominal value of investment. Book value of investment. Pre-acquisition. Pre-acquisition reserve is same. Nominal value is same. Book value is same. So cost of control doesn't change. So for every year, what should you recompute? Minority interest. So share capital analysis, will it change? No. Share capital analysis will stay the same. Reserves and surplus? Yes. In reserves and surplus, pre-portion is same. Post will keep changing. As every year happens, more profit will come in the post-acquisition part. So post-acquisition will increase. Post of holding, post of minority will keep changing. Pre will remain same. So actually, marks are allocated for computing minority interest 7 times. That also minority interest will change only because of post-acquisition. When I solve, I want you to see every year, I'll do every year full computation. I'm not going to try to save time or save the length of the answer. I'm going to explain it in detail. I hope you understand. So for every year, share capital will be same. For every year, cost of control analysis will be same. For every year, pre-acquisition reserve will be same. Post-acquisition reserve will keep increasing or decreasing because of every added year additional profit or loss, and that will keep changing the minority interest. Understood? And the unique portion is the company is going to make loss. Loss, 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 loss. If the loss becomes so huge, there is a possibility that minority interest can become negative. We've done it when we did the concepts. I told you minority interest cannot become negative. If minority interest becomes negative, write it 0. That whatever is that minority is negative portion, loss, will be borne by holding company, deducted from holdings reserves. So do we have to prepare consolidated balance sheet? Hey, no, not needed. You don't have to prepare CBS. Just compute that loss. Can we begin?
Yes, sir.
Let's start with what we know. How much is the share capital of the subsidiary? 50 lakh. This will be held by holding, GB Limited and minority. Can I say holding limited has 80%? 80% is 40 lakh. Minority will have 20% is 10 lakh. In our cost of control table, I would write nominal value of investment to be how much? 40 lakh. Everybody understood nominal value of investment 40 lakh? Then the next piece of information I have is reserves and surplus is 4 lakh 64. Reserves and surplus is 4 lakh 64. Guys, read the question clearly. On the date of acquisition, reserve is 4 lakh 64. So cannot split 4 lakh 64 into pre and post. 4 lakh 64 is on the date of acquisition. So I am also writing on 1st of April 2018. That is on the date of acquisition. Actually, they have not asked as on the date of acquisition. They only asked as on the consolidated balance sheet. The extra. So I would write completely 4 lakh 64 as pre. Post is 0. This should be further split between holding minority. We should do one more table, but that is needed when we have more than one reserve. Only one reserve, no. Shall I write here only? Pre, I'll share it between holding minority. Post, I'll share it between holding. Post is 0. What will you share? Nothing. Share the pre-reserves 80 and 20. 80% of 4 lakh 64. 3 lakh 71,200. Share the pre-acquisition reserve that belongs to minority. 90 to 800. Minority 10 lakh. Minority 90 to 800. So minority interest share in the share capital is 10 lakh. Minority share in the pre-acquisition reserve is 90 to 800. Minority share in the post-acquisition reserve is 0. Can I say minority interest 10 lakh 90 to 800? With regard to holding company, we are doing cost of control. I would write book value of investment and compare it with nominal value after adjusting pre-acquisition reserve. How much is book value of investment? 58 lakhs. From 58 lakh, I should deduct the pre-acquisition reserve share of holding company, which is 3 lakh 71,200. You deduct this. What do we get? 54 lakh 28,800. 40 lakh liability. 54 lakh 28,800 asset. 14 lakh 28,800 is goodwill. Understood? They have asked you to compute only two things. One, cost of control. Two, cost of control as in goodwill or capital reserve. Goodwill is 14 lakh 28,800. Minority interest is 10 lakh 92,800. We're done with the date of acquisition. Can we go to year end? If the acquisition happens on 1st of April 18, year end is 18-19, 31st of March 2019. For the year 18-19, how much profit is earned? Minus 14 lakh 50. This 14 lakh 50 is completely post. 14 lakh 50 is completely post. Pre is 4 lakh 64. We already know it. So for the first year end when you compute, share capital analysis is going to be same. It's going to be whatever is same. I'll give it in yellow color box. Same thing. There's no change in this. There's no change. Whatever we did at the beginning of there, same is going to remain here. And pre-acquisition reserves is 464, same. Post-acquisition reserve will be minus 14 lakh 50. Minus 14 lakh. So as on the date of consolidation, total reserves not needed, but total reserves is 4 lakh 64 minus 14 lakh 50, which is minus 9 lakh 86,000. Everybody got it? We will do cost of control. Cost of control full same, no change. No change, same. So this same. This same what we had done. Share this, yeah, pre-acquisition. Between holding minority. Same. In fact, you don't have to do this. You don't have to do this. You can skip this much. What is new? This much is new. 14 lakh 50 is the post-acquisition reserve. Shall we split this between holding and minority. Help me with 80-20. 11,60,000 minus 2,90,000 also minus. So minority interest, there will be something new. Shall we do it? Minority interest. Minority interest, share capital is going to be same. Pre-acquisition reserves is going to be same. This much we had in the past. Correct, Alva? Okay, that I won't make it yellow. Let that be there. What are we going to compute newly? Post-acquisition reserve. I will write. How much? Can I write minus 2,90,000? I can write minus 2,90,000. Ultimate, no. I can write minus 2,90,000. Total of minority interest cannot become negative. How much is total minority interest? Still positive, no? Possible. This is right. This is the first part. They are going to give you 1 mark for cost of control, 1 mark for minority interest. Because 7 years are given. 2 things have been asked. The moment you do cost of control, no. The moment you do cost of control, no. 7 marks is in your pocket. Why? For every year, cost of control is same. 1 mark for every year. Not necessary to write every year. Write one statement, remains same. If you don't know, write 7 times. If you don't know, write 7 times. Hey, even if you write 7 times, you won't take too much time. 25-30 minutes can be given for 14 marks question. I'll give you, there's a separate video that I made on time management, how to manage time. 14 marks question, how much time can you take? Some people say 14 marks question, you can finish it in 20 minutes. Agala. There's a separate video. Let's not discuss about that right now. But you understood this part? Very good. Come on. What I want you to focus right now is, come to next year. This year done. Only thing new is 8,02,800 minority interest. For this, again, you get fresh 1 mark. This is where it starts. 7 marks for doing this cost of control. 1 mark for doing this minority interest for year 1. Can we go to the next 1 mark? Very good. Next year. Year 1920. In the year 1920, how much is the profit earned? Minus 23 lakh 20. Again loss. Again loss. Okay, now I want you to focus. This remains same. No change. Here, pre remains same. No change. In cost of control, nothing different. Everything is absolutely same. In minority interest, share capital and pre-acquisition reserve, same. So this much is same. This much is same. And cost of control, same. I'll make it yellow. It's absolutely okay to not write this again. What is going to be new now? Post-acquisition. Now I want you to think and tell me wisely, how much is the post-acquisition profit? Minus? Very good answer. You should not tell 23,20,000. Why? We acquired on 1st of April 18. 18-19 is post-acquisition period. 19-20 is also post-acquisition period. As on the date of acquisition, reserve is 4,64,000. After the date of acquisition, it's like bad acquisition. You made a bad choice. You acquired one company. I'm going to say you acquired major stake in that company. From the time you acquired, it's making loss. Like you remember, I told one company in which I acquired shares and it made 80% loss. But actually, was it actually 80% loss? Okay. Did you guys see it? Understood that part? Okay. For those who are wondering what it is, I'll tell you later. Yeah. Okay. We observed MCX stock dipping 80% in our previous discussion. Yeah. One day. Heart attack escape. Okay, fine. Now tell me, what is the post-acquisition profit here? Minus 14,50,000 minus 23,20,000. Together it will become minus 37,70,000. Can I write here? The post-acquisition loss is minus 14,50,000 minus 23,20,000. Together minus 37,70,000. This has to be split between holding and minority. How much is holding share? 80. Minority 20. 80% of 37,70,000. And minority. This 30,16,000 will go to balance sheet, consolidated balance sheet, revenue reserve negative. But we are not doing that. I'm only concerned about minority, minus 7,54,000. Here I'll write minus 7,54,000. Can I write minus 7,54,000? Yes. But the total minority interest, can it become negative? No. Check how much is minority interest. Hey, still positive. Yeah, Gatti minority. They can bear this loss. minus, sorry, 3,38,800 positive. I hope you understood. We're done with one more year. 7 marks for cost of control already we've got. 2 years completed. For 2 years, 2 marks for minority interest also we got. So 9 marks already in our pocket. Shall we chase the 10th mark? Yes, next year, 2021, year ending 31st of March 2021. What is happening? Congratulations, hat-trick loss. This time better, bigger and better. Every new year, they're like, we want to become bigger and better. And they're proudly doing bigger and better when it comes to loss. 29 lakh loss. Share capital, same to same. Sir, do you have to write again? You don't have to write again actually. And pre-acquisition reserves, same to same. Sir, do you have to write again? No. Cost of control, same to same. Do you have to write again? No. Minority interest, share capital, same. Pre-acquisition reserve, same. Understood? Yes, this much not new. Everything I'll make it yellow, saying that not new. Now we'll do something new. Yes. Post-acquisition reserve. How much? Post-acquisition reserve is not minus 29 lakh. It is year 1 after acquisition loss. Minus 14 lakh 50, minus 23 lakh 20, minus 29 lakh. What I do is previously we had 37 lakh 70. No. I would write minus 37 lakh 70, minus 29 lakh. Because writing too lengthy will take too much space. So can I say loss will become 66 lakh 70? Split this between holding and minority in the ratio 80 and 20. The 53 lakh 36, I'm not worried. Why? It will go to consolidated balance sheet. Ignore. Minority will become 13 lakh 34,000 minus. This I'll write it to minority interest. Come to minority interest. Write post acquisition reserve 13 lakh 34,000. How much will be minority interest? First, tell me how much will be minority interest. Minus 2 lakh 41,000. First, write minus 2 lakh 41,200. Minority interest cannot be written negative in CBS, consolidated balance sheet. Can I write negative? No, sir. I'll make minus 2,41,200 as 0. Someone has to bear the loss. Total loss is there. 80% to us, 20% to minority. If minority doesn't bear, I should bear. Like partnership. You must have done in foundation, partnership, dissolution or loss. When the loss is coming, no, both the partners should bear. If one of the partners says, I am partner in the case of profits only. If there is profit, you call me. If there is loss, I don't care. Then that loss has to be borne by the other partner. So this minus 2,41,200 loss of minority will be actually borne by holding company. Holding company consolidated balance sheet will write reserves and surplus on the liability side. Yes, from that reserve, we should deduct. From that reserve, we should deduct. Revenue reserve will be already negative, no? It will become more negative. Usually, pre and post reserves of subsidiary, when we split holding minority. If minority interest becomes negative, full 100% of that revenue reserve which is negative, post acquisition reserve which is negative, will be borne by holding company. That's it. Are you getting it? Yes. Do it normally. If they ask CBS, this 241,200 deducted from revenue reserves in the consolidated balance sheet. Minority interest in CBS. CBS means consolidated balance sheet will be 0. Done. One more mark in your pocket. 10. Can we do 4 more years to get 4 more marks? Yes. Can we go to next year 21-22? Yes. 21-22. That is year ending 31st of March 2022. Share capital, same to same. Pre-acquisition reserve, same to same. Cost of control, same to same. And minority interest, share capital and pre-acquisition reserve, same. So can I say this much need not be written again? But for your understanding, I am giving all of this all again to you. What will change? Post-acquisition reserve. Post-acquisition reserve was how much previously? Minus 66 lakh 70. Now add 29 lakh more loss. Oh no, 6 lakh 96,000 more loss. Okay, can I say 66 lakh 70 minus 6 lakh 96,000 minus 66 lakh 20 minus 6 lakh 96? What do we get? 73 lakh 66 to be split between holding and minority in 80-20. 80%. 58 lakh 92,800 will go to consolidated balance sheet. How about 20% of 73 lakh 66? 14 lakh 73,200. I will take it here. Deduct how much? 14,73,200. You tell me how much is the minority interest? Minus 3,80,400. Understood? Can the minority interest be written negative in the consolidated account? No, it should be shown as zero. Because it will be shown as zero, loss will be borne by the holding company, 3,80,400, and in the consolidated balance sheet, I'll write minority interest as zero. Everybody got this? How much is the loss borne by holding company because of minority interest becoming negative? 3,80,000. I have a question. 3,80,400 loss borne by the holding company to make the minority interest zero. Is 3,80,400 in this year or till the end of this year? Till the end of this year. Why? When we took post acquisition, it is only this year loss? No, ever since acquisition, everything else. After acquisition, every year's loss together. Am I right? Yes, here I took only current year loss. No, every year after acquisition. So, loss borne by holding company. Because minority interest has to be positive. On the balance sheet date is 3,80,400. In this, how much loss was already taken in 2021? How much loss was taken in 2021? Very good. How much is the additional loss actually happening because of 21-22? 139,200. Is this asked? No. For you to know that 380,400 is only consolidated loss till date. Cumulative loss till date, not the loss in the current year. Previous year 241,200 we already booked. This year we do 139,200. Balance sheet is a position statement. It's prepared as on a specific date. It is not prepared for a specific period. Previous year, the year before that, everything is covered. Pre-acquisition periods profits are also included in minority and whatever computations that we've done. Understood this?
Yes, sir.
Pakka?
Yes, sir.
Very good. Later when the subsidiary starts making profit, minority interests loss will go on reducing. Then we'll add it back to the reserves of the holding company in consolidated balance sheet. All the changes are happening only in consolidated balance sheet. One more mark in your pocket. 11 marks done. Can we use the last 3 marks?
Yes.
Last 3 marks, last 3 years. Year 2022-23. That is 31st of March 2023 is the year end. Share capital absolutely same, no change. Pre-acquisition reserve absolutely same, no change. Cost of control same, no change. Minority interest, share capital and pre-acquisition reserve same, no change. This much I'll make it yellow. Can I?
Yes, sir.
Saying that this need not be written again. But why am I writing? Oh, sorry. Yes, sir. Sir, your battery is dead. Not mine battery. Laptop battery. Okay, this much is same. No change. What do we do now? Post acquisition reserve. Help me with post acquisition reserve. Already we had minus 73,66. Now we made 1,90,000 profit. Finally, your investment is reaping benefit. Wow. 73,66 minus plus 1,90,000. 71,76,000. Split between holding and minority in 80-20 ratio. Holding share 57-40-880 CBS. Reserves and surplus revenue reserve. Don't worry. 20% 1435-200. Right? 1435-200 here. This is changing a year. Now tell me how much is minority interest. Minus 3,42,400. So still the minority interest is negative. Can you write negative? No. Minority interest cannot be written negative. So that minority interest has to become zero. So the loss will be borne by holding company. How much? 3,42,400. Is it in this 22-23 342,400 or till the end of this year? Loss borne by minority till the end of this year is 342,400. Got it? How much was borne in the year 2021? 2021 they bore 241,200. Correct, Alva? 2021 they bore 241,200. 21-22 they bore how much? 1,39,200. I've written this last year also. See, 241, 200, 139, 200. Here, 241, 200, 139, 200. Last 2 years lost. Now, current year, it is negative. Reversal. Now, because now they made profit, it's getting reversed. See, 241, 200 plus 139, 200 is how much? 3,80,000. See, last year, how much was the loss? 380, 400, no loss that we were bearing. Now that 380, 400 is becoming 342, 400, meaning some of the loss is getting reversed. Some of the loss is getting reversed. So this is only accounting adjustment. Understood? How much for this year? Take 342, 400 minus 241, 200 minus 139, 200. 38,000 rupees is getting reversed. Loss what we were bearing on behalf of them, 38,000 is getting reversed. Minority interest from negative, it is slowly moving towards positive. When minority interest will become positive one fine day, because huge accumulated profits come, that day whatever I was booking loss is completely reversed. Understood? 2 more years left. 12 marks aged, 2 marks left. Shall we start getting the 2 marks also? 2023-24. Year ending 31st of March 24. 6 lakh 80 is the profit. Observe. This is going to be same. Share capital. Pre-reserves, same. Cost of control, same. Minority interest, share capital and pre-acquisition reserve, same. No change. Same. 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 Minority interest, first 2 lines are same, but I'm not making it yellow. Let it be there. Come to, because I want you to write complete minority interest for that year. Come to post-acquisition reserve. How much was there previously? It was minus 71 lakh 76. How much profit did we make this year? 6 lakh 80. Shall I add 6 lakh 80 to minus 71 lakh 76,000? How much will it become? 64 lakh 96. Split between holding minority 80-20. 80. 51 lakh 96 800. 20. 12 lakh 99,000. 51 lakh 96 CBS. Reserves on surplus. Revenue reserve. Minus. Don't worry. 12 lakh 99 200. Right here. Post acquisition. Minus 12 lakh 99. Minority interest is still negative. Minus 2 lakh 6 400. This cannot remain negative. Yeah. We'll make it positive by making it 0. By taking the last two holding company. 2,06,400. What had we written here? Loss of minority 342,400. Loss of minority here has become how much? 2,06,400. So the loss has reduced. Loss has 2021 241 200 loss. 21 22 139 200 loss. 22 23 minus 38,000. Reversal of loss. Same for those 3 years. Same for those 3 years. In 23-24, there is profit and loss is getting reversed. How much? Take 241 200 plus 139 200 minus 38,000. Basically, you would get 3 lakh 42 400. 3 lakh 42 400 loss is becoming 2 lakh 6,400. How much is difference? 1 lakh 36,000. Hey, this table is not needed in the exam. For you to know that it's getting reversed, I'm doing it. 13 marks done. Shall we go to the last 1 mark? Yes. Share capital same for 24-25. Okay. And year reserves same. And year cost of control and minority interest. First 2 lines, share capital and pre-acquisition reserve will be same. What will change? Post-acquisition reserve. How much is post-acquisition reserve? Post-acquisition reserve previously was 64 lakh 96 loss. Now 12 lakh 70 profit. 64 lakh 96 minus 64 lakh 96 plus 12 lakh 70. 52 lakh 26. Share it between holding and minority. Holding 80, minority 20. 41 lakh 80,000 800 will go to consolidated balance sheet. Revenues, don't worry. How about 20%? 10 lakh 45,000. This I would have to write here. Minority interest post acquisition minus 10 lakh 45,200. Understood? Yes. Now identify minority interest. It is positive. It is in between 3 years, whatever loss was borne by holding on behalf of minority only in the CBS is now completely reversed. Is now completely previously how much was the loss borne? 2,06,400. Now loss borne will become zero. I'm going to say that 2,06,400 is the loss borne. In that same thing, yeah, whatever we have done here. 241, 200, 139, 200, minus 38, minus 1,36,000. Whatever is the balance will get reversed now. This was also over, no? Balance, whatever is there, will get reversed now. How much will it get reversed now? Not zero. Some part will get reversed now. Take the total. Do one thing. Listen to me. Take your calculator. Type 241, 200 plus 1,39,200 minus 38,000 minus 1,36,000. 2,06,400. Was there? No. That 2,06,400 will get reversed now. It will get, so loss borne by holding company, now it will become zero. Are you getting it? Yes. Whatever was loss borne once is now getting reversed slowly, and it will all get reversed. If you want, you take these 2 years they bore loss. These 3 years it got reversed. 2,41,200 plus 139,200, whatever it is, minus 38 minus 136 minus 2,06,400 comes to the same value. Are you getting it? Yes. This was a lottery question. 7 marks for just computation of cost of control, because it doesn't change every year. And 7 marks for minority interest, where share capital is same, pre-acquisition reserve is same. Only post-acquisition reserve is changing every year. So loss will keep changing. You will compute that share, write it. It will become zero. It will become negative, but write it zero. Tell this much loss to be borne by holding. This much loss to be borne by holding every year. So this is a unique question, but not difficult question. Conceptually, if you're strong, even if the question is unique, our solution is simple. Answer looks lengthy, but easy and doable. With detailed explanation, I took about 30 minutes. In the exam, if you do it skipping all that yellow things, you can finish it in 20-25 minutes comfortably. Got it? Yes, sir. Yes. Ashte friends.